Hello and welcome to the week ahead video with me, David Madden. Before we take a look at the major events of next week, let's take a quick recap of the major events of the week just gone. The Jackson Hole Symposium in the US has been the highlight of the week so far. This video has been recorded ahead of the update from Jerome Powell. Mr. Powell is the head of the Fed Reserve, so his update is going to be closely watched. So this video might show some prices that are a bit out of date because we've yet to hear from Mr. Powell yet. Going into the Jackson Hole Symposium, there was a lot of talk that this could be the opportunity that Mr. Powell might lay down the foundations to suggest the Fed Reserve might be looking to begin their tapering of the bond buying scheme either later on this year or in early next year. In the last week or 10 days, we have seen some volatility in the markets. We saw a large sell-off in the S&P 500 about a week and a half ago. And since then, the market has rebounded, has been on to set a new all-time high. But it's worth noting that the declines seen here in the kind of mid to late August was largely driven on the fear that the Fed Reserve were going to taper their bond buying scheme sooner than expected. It's also worth pointing out concerns about China slowing down and concerns about tighter regulation in China were also a factor in that. So we have seen a little bit of weakness as we have in the US500 as we've approached the all-important update from Jerome Powell. So what's really going to be focused next week is the US non-farm payrolls report. It comes out on Friday, and people are going to be asking themselves the question: is the US jobs market getting stronger and stronger? If so, could that lead to the possibility of the Federal Reserve tapering its bond buying scheme later on this year or early next year? Bearing in mind the most recent jobs report was very strong. The headline number came in above expectations. The earnings figure increased. And we also saw another drop in the unemployment rate. So that really hammered home the idea that the US labour market is improving. Are we going to see something similar again? If we do see a strong jobs report, that could ramp up fears that the Fed Reserve will look to tighten its monetary policy either later this year or early next year. In relation to the US500, while it continues to hold above these three simple moving averages, it's likely the recent upward trend will continue, and a move on higher from here could see it retest the recent all-time highs. And then if we break beyond that, we could look at targeting 4,510, 4,520. If we do see a sharp move to the downside, support might be found from this simple moving average here, which comes into play around 4,000. Other markets and other economic indicators coming out next week. We have a couple of important economic updates from Australia. On Wednesday we have the second quarter GDP reading from Australia, and on Friday we have the retail sales reading. Now, the Australian dollar has come under a lot of pressure in recent months. We can see here it's been in a strong downward trend, is what the wider view has been. In the middle of August, the AUD USD fell to a 9-month low, largely to do with concerns about China slowing down and weakness in the Australian dollar, the lockdowns in Australia because of COVID-19, also to do that we saw a broad rally in the US dollar. I mentioned a moment ago about in the last few weeks and months there has been talk the US economy is getting stronger and the Fed Reserve might look to tighten its monetary policy in the months ahead. We have seen a bit of a pullback in the US dollar in the last week or two, hence why we've seen a rebound in Aussie dollar, but bearing in mind the broader trend is still very much to the downside. Traders are going to be looking at the GDP report and the retail sales report as a kind of a gauge of how strong is the Australian economy performing. Bearing in mind, Australia is quite interlinked with China because through trade. China is showing some signs of slowing down. What we've seen in Australia as well, we've seen cities such as Canberra go into lockdown quite quickly, even if there's kind of only one case. So we have seen kind of quick fire lockdowns being announced in Australia that could impact the growth of the economy and the retail sales. If we do see a continuation of the broader decline in the Australian dollar, we could have headed back down towards 0.7181, or perhaps test the August low of 0.7105. If we do see a move to the upside, we could look to target this zone here, 0.7380. It's also worth noting we have an update from OPEC Plus that any kind of commentary and language in relation to the body's potential changes to production plans is going to be very much in focus. Earlier this month, when there was concerns about China slowing down and that Chinese demand for oil might dwindle, that put pressure on the oil market. US oil fell to a 2-month low. Since then, it has rebounded, so it's recouped a large portion of the losses it incurred. But still, nonetheless, even though the headline stories are no longer fixated on the tighter regulation in China or the possibility of the Chinese economy slowing down, those stories are still lingering in the background. But in the near term, we can see here that since then we can see that US oil continues to hold above these 3 simple moving averages, and while it does, it's likely the near-term uptrend will continue. A move higher from here could see it 69.40. If we do see a fairly large break to the downside and we break below 66.68, which coincides with this moving average here, we could be heading back down towards 63.69. It's worth noting that the OPEC Plus update will be on Wednesday. That's all from this video. Thank you very much.